Hi everyone, it's Eric from Indicator Warehouse, and it is Tuesday, October the 15th. Tough trading day today. You can see here I lost a little and I won a little. I got a couple other charts that are not on this screen. Overall, I'm a little bit to the good on the day. But I think only my broker is going to be happy. I probably made enough to cover my commissions and fees and not a whole lot more. Not a stellar day today. Lots of things still going on in the US government, and those stoppages in the work of the US government and so on is wreaking havoc on the marketplace. So, what is a trader to do? I thought that would be a good topic to cover today. What do you do when the market is throwing you a bunch of curveballs? Here is the NASDAQ, and let's take a look at here, the NASDAQ on my Falcon Swing Trader. And I'm going to show you a couple of things that are going to give you the heads up that this market is not behaving as it should. First off, in the Falcon Swing Trader, we have a trend change signal. It occurs when the trend line changes color. So you can see here the trend line is moving from red to green. And what we wait for is we wait for the market to give us a push to the downside, which occurred right here, where we got a couple of red bars against a green trend line. They actually printed a signal, not that we would take that signal because our trend line is green. And then we come back with a buy signal with trend. And now actually this one is practically textbook. It occurs near the top of where would be resistance at the moment. So let me pull this over and you can see what it would have looked like when it unfolded. So here the market is moving up. Here's our up. We've changed our trend line. Here's our down. Here's our up. It's right back at resistance. Now this is normally a signal that we would expect good follow through on. And you can see we didn't get it. The market came well short and in fact would have stopped us out. And look at what happens. We got the same thing happening the other way. Here's our trend change signal now. See, we've gone from green to red. Here's the down, here's the up. Here's the down, and you can see perfect placement. I would actually probably enter below the lows, but that's not going to help us because once again, the market reverses shortly after bringing us in. Okay, so what do you do when you see that type of thing happening? Well, first off, you need to recognize that these types of days exist. Not every day is going to be a strong trending day. There are days that the market is just going to be unpredictable, and today was one of those days. So you need to recognize that you are in a difficult trading day. So what can you do about that? Well, with my trade manager here, I'm actually able to dial down my risk exposure. Currently it's set at 2% of my account. I'm going to change that to 1%. So if I get a signal that looks promising to me, like this trend change signal that I know is a high probability signal, I can still take it, but I'm going to dial down my risk amount to where I'm only risking 1% of my account. So if the trade works out, great. If it doesn't work out, well, at least I'm not going to get clobbered. The other thing that I tend to do is I tend to have a limit on how many trades like this I will take. So you can see right here in a short matter of time, in about the space of 45 minutes, we had two signals that should have worked out. I got two signals with trend, strong signals. I know they're strong signals, and both signals did not reach their targets. Now, I actually didn't take these signals because we had indications that the trade would not work out. You see all these double dots here? You see a double dot there, you see a triple dot here. That's actually an early warning that a buy signal may fail. So I actually didn't end up taking either of these trades, and thank goodness because of that. But regardless, these trades should have worked out. So I got two signals that are not working, signals that should work, signals that are high probability signals. So that tells me it is going to be a tough day. So I either dial down my risk amount or I just recognize it's going to be a difficult day and I don't trade. The last thing you want to do on a day like today is end up over trading. And these are the days that are the easiest to overtrade on. Because if I had taken this signal up here, I would have incurred a loss. If I had taken the signal down here, I would have incurred a loss. Well, now I'm starting to get a little bit hot and heavy, and I may have missed this move here to the upside, or maybe even this move here to the downside, both of which would be profitable, and now I'm getting really upset. And now I'm thinking, okay, well, I've got to take some sort of trade, and you may end up selling here only to get whipsawed again. So it is extremely easy to overtrade on a day like today. Recognize it is a tough day. It is a ranging market. Either step away and come back tomorrow, or dial down your risk amount like I showed you, so that if you do take a trade and you do get hit, at least you're not going to get wiped out. You're not going to damage your account. And that's exactly what I did today. So end of the day, I made a little, I lost a little. I printed a small number in the green, like I said, just enough to cover my expenses. But the important thing is I did not damage my account. So that's the lesson you can take away when you're trading in difficult times like we are right now. Hopefully tomorrow will be a little better, but until things work out with the U.S. economy, at least some sort of stability where investors can anticipate some sort of stability, I think it might be more of the same. But we'll see. This is Eric for Indicator Warehouse. I'll talk to you tomorrow.